People are already joining. Welcome to this session. We're in for a very interesting session tonight as we discuss all about passive income, making passive income through money market and bond funds. Welcome to you all. We have a very interesting panel of speakers here tonight, and we're here to learn and put what we learn into action. So thank you to all who have already joined on the dot. We'll get started in about the next 10 seconds, and then everyone else can join in as we start. I think we have quite a good number to start off with. So I'd like to give a little introduction of today's session, this webinar. Thank you so much for everyone who is making time to be part of this webinar. We're going to learn so much about how to make passive income using money market funds and bond funds. We're even going to learn what is passive income. Sometimes we use that word and we don't quite know what it is. So our experts today are going to tell us a little bit more about that. But let me just give a brief background of why we're holding this session today, this webinar. Now, Abojani is marking its 50th online personal finance masterclass. And because we want to mark this huge milestone, we are hosting this significant webinar in conjunction with Britam Asset Managers, who will be telling us all about that passive income and what is on the market for us to make that money. Now, the inaugural masterclass for Abojani was started in November 2018. So that is 5 good years, almost 5 years of doing this. And we have seen so many strides of all those who have participated in this class. There are people who have participated in the 1 Milli challenge. Some people didn't know that they could save that much, but that's why personal finance in financial literacy is all important. So Abojani Investment Limited is a leading financial and investment education firm. It's operating in Kenya. Now, since its inception, it has continued to pride itself in its ability to connect with retail investors in a very relatable manner, while at the same time relaying financial education and content through digital media. We know it's all about digital media these days. Now, Abojani is a member of the highly esteemed Institute of Certified Investment and Financial Analysts. That's popularly known as ICIFA. It has recently officially partnered with the Nairobi Securities Exchange in a move to work with NSC Digital Academy in an effort to jointly increase the awareness of capital market products through financial education in the country. So now today we are so excited because, as I mentioned, we have partnered with Britam Asset Managers just to take us through how to make passive income and using the money market funds and the bond funds. So I'd like to give a little introduction of our 2 speakers today, and then we will get right down to it. So my panel, as you can see, we have Barak Obatsa, who is the CEO of Britam Asset Managers. I'll give you a chance to introduce yourself a little bit more as we go along. And we also have Rose Mutiso, who's the Business Development Manager for Britam Asset Managers. Welcome to you all. Yes. So now I'd like us to talk a little bit about Britam Asset Managers, where you're coming from, its heritage, and then we can go down to what exactly is passive income, and then how can we make that passive income through money market funds and bond funds. So over to you, Barak Obatsa. First, start by telling us a little bit more about yourself and what you do at Britam Asset Managers and what Britam Asset Managers is all about. Tell us a little history about it, and then we can go down to the discussion. You can unmute your mic.
Thank you very much, Claire. First, let me just say I'm very excited to be here today and thank Abojani and of course Britam for enabling us to be there so that we can share very good, great ideas on how we can be wealthier and richer. And before I do that, let me just introduce who Britam is and also talk a little bit about myself. Britam Asset Managers has been in existence since 2004. Of course, it operates within the Britam Group. And basically, when it started at a stage when investment management was not a big thing in Kenya. There were very few asset managers, but there were very, very many gaps, and people were basically craving for some investment products that were still not in the market. Britam is licensed by both the CMA and RBA, and we're also active members of ISIFA. At the moment, Britam is managing over 200 billion Kenyan shillings worth of assets in various types of assets. But we are more known in terms of managing private wealth and retail investing. So this particular area and topic is very apt to us. It's an area that I think in the market, we can say we are among the leaders in terms of providing investment solutions to individuals and facilitating and working with financial planners to ensure that we give you a good product and solution. We are, of course, among many managers. Now there are about 30 fund management companies. And our key solutions include we provide equity funds, we provide balanced funds, we provide bond funds. We also do private wealth management. We're also very prominent in property advisory and, of course, providing pension solutions. The staff complement is over 50, as you can see. So this is able to serve you quite effectively. We do manage our operations through an exco, just to ensure that the governance process is strong. I'll also want to talk to you about just a short commentary on where we are in terms of macros, in terms of economic growth. From 2021, where we had a rebound from spillover of after COVID. 2022, we were just below about 5% in terms of growth. We do expect that 2023 will bring us just over 5% in terms of growth. But obviously, there has been a lot of challenges globally in terms of wars in Ukraine, currency weakness, which has affected quite a number of African countries, inflation pressures. But we always say, in terms of challenges, as investment professionals, we are here basically to guide you through some of these challenges, and within challenges, there are very many opportunities that basically come through.
Okay, thank you.
Yeah. In terms of just talking about just a good way of looking at some of the investment products that are quite common with us, one has to make quite a number of decisions, or just have a frame of mind. You have to decide in terms of if your risk appetite is low, medium, or high. That will basically guide you on where to invest. What are your liquidity needs? Again, drives your investment requirements. Expected returns. What do you expect as returns? Then it will also drive you to a certain type of investment. Investment horizon. How much do you have to invest? And also this ties up with risk and liquidity, in the sense that if you have a long time to invest, then liquidity is not a major concern, and you can be able to take much higher risk. Of course, more importantly, you need to be able to look at what that particular investment manager provides in terms of experience and how professional your provider is. There are quite a number of course, fixed income products or interest-bearing products in the market. treasury bills, which are issued every week, treasury bonds, which are also issued by government, but they are basically risk-free from a credit perspective. Bank deposits, microfinance and circles also do provide deposit opportunities. And of course, money market mutual funds, which also provide very high liquidity, but also much better returns in the short term. Wealth management solutions, including what we provide, loans to friends, corporate commercial paper, corporate bonds. So there's a whole continuum of fixed income products that you can invest in. But we always advocate as an individual or busy person that you invest in a vehicle that that can be able to allow you to sleep properly, soundly, without interfering with a lot of your busy time. In terms of just as little outlook, or just a basic outlook in terms of equities, I think for the last few years, the equities have been very volatile, and particularly now in 2023. But having said that, equities still provide an opportunity, especially for those who have a long-term horizon. Most stocks, quite a number of them at a discount, especially on companies that are fundamentally very, very sound. So it's an opportunity that you can look at. Fixed income, I think fixed income products, interest rates have gone up. And like I said, in every challenge, there's always an opportunity. So again, it provides an opportunity for you to be able to enhance your investment yield. Just going back to Britam, we do, like I said, we do provide a number of services, both for retail, institutional, and alternative assets. But like I said, our primary quite specialization and our heritage has been on retail funds, where we provide a range of unit trust funds. But we can also customize your portfolio and give you a discretionary portfolio management service. We do provide quite a number of investment funds, from money market to bond funds. And on the institutional side, and also we do provide pensions and umbrella funds especially for medium and small businesses, especially for umbrellas. And also, like I said, we do a lot of alternative investing for clients, especially on the real estate side. Just talking about myself, I've been in financial services for over 20 years. I was among the first CFA charter holders in this country's pioneers, and I'm quite willing to share with you a lot of my experience. But one great word that I probably want to leave with you is that in every investment, you need to be very goal-oriented, and I've seen this work for me personally. I can tell you, for example, some years ago, I started an investment plan for myself, even as an investment professional. And what I noticed, the best way to invest is basically to have a standing order and work towards a goal. Make sure you define your goals and work towards it. And to my surprise, I've found that I used to invest in one or two plans, and I would say very passively. I just put a standing order in something I believe in for something, and I find that basically my pocket has grown to my surprise. And this is because I've not been looking at it. I've not had any effort to look at it as a professional who is also busy in other things. So long as I set my goal, put in a standing order, of course, from time to time, I see how I'm doing. But I think that is the magic. And with the power of compounding, I just can't believe what I've seen after several years. So I think one thing that I want to leave is that just set your goal. What do you want? And put in a standing order in an investment. If you want to invest slowly, of course, if you have lump sums, you can be able to also have a plan. And basically, we are here to assist you in terms of allocating your portfolio if it's a lump sum in a way that and basically meets your goals, meets your liquidity requirements, and also ensures that you invest in assets that you have tolerance for in terms of risk and basically your risk appetite. So again, like I said, I'm quite excited and look forward to an interactive session. Thank you.
Thank you so much for that, Barak. I think one of the things that has stood out that you said was you need to invest in something that will allow you to sleep. You don't want to invest in something and you're wondering, oh my goodness, is something going to collapse? You need to be able to sleep. Okay, and that's what passive income is about. And we'll learn more about that. And I think one of the other things that also came out very clearly for me was the assets under management for Britam asset managers, over 200 billion, which is quite impressive. And something else that people need to really pay attention to is regulation. And you said that Britam Asset Managers is regulated by the Capital Markets Authority and RBA. So those are very important factors that will help you sleep because many times people have put their money without really doing their due diligence, and then you come to find out, were they really even regulated? So it's very important. And I think it gives an investor that confidence that these Britam Asset Managers is regulated by the CMA and RBA and the assets under management. And I think there's so many products that you've mentioned there that we're going to speak about more. Now, I also like the way you said you need to be goal-oriented. If you're putting money aside, for what reason? You have to look at your investment horizon. Are you looking to buy a car? Are you looking to buy a house? What is the reason you're putting the money aside? And that will actually really give you the motivation to put that money aside. And I also like what you said, that when you put it a standing order, you don't even have to think about it. So you'll just keep on looking at your portfolio and seeing how it grows. But you don't have to think, oh, I have to put this deduction. It's already done. So I really like what you've mentioned then. I'm sure everybody listening right now is just taking notes and trying to understand more about that. Now, I can see a lot of people are listening. People are in the chat box saying that, wow, they're listening from as far as London. Welcome. They are enjoying the session, so keep on having those questions coming in, and then we will sample them as we go along. But there are also some other questions that had come through, and I'd like you to tackle those questions, Barak, before we go on to the next session of this discussion. So let me just pull those up, and then we can go on to them. And one of them is, what are some of the considerations that someone should think about when they're putting their money in a unit trust? And you've mentioned the investment horizon and whatnot. But for that specific person, if you have that long-term goal versus somebody who has a medium-term goal or a short-term goal, what are some of the factors you should think about first?
Yeah, so basically, what I always say is that you need to look at yourself as a person and say what basically do I want to achieve with this particular investment, and once you put that in mind, that is always the first thing, and you ask yourself, having said that. That will basically guide you into the type of investment that you want to take. For example, if you say, you know what, I want to raise a million shilling so that I can put a deposit in my house, then you have to ask yourself for how long. I mean, when do you need the house? Then if I need the house in 2 years, then I have to moderate the kind of risk that I want to take, because you do not want to get into an investment that basically will then be handicapped by temporary market conditions exactly when the opportunity to buy a house comes. So basically, that is number one, investment goal, which basically also then tells you the type of investments you need, maybe more liquid. If you are patient enough, then you can take slightly more risk and earn more. The other thing is also you have to consider is the type of investment that you take. Of course, we know how investments work. If you want a higher return, the most likely and almost always, then you have to take a little bit of risk. And if you want to take a little bit of more risk, then you also need to factor in that maybe you will need that port as for a slightly longer time than a port, somebody who requires that in a short while. And also that will dovetail to the type of products that you will take. For example, the differences that you'll get between, for example, our Bond Plus and our money market fund. It speaks to almost those goals, liquidity kind of requirements. The other thing, of course, you always need to look at the kind of manager that you're investing in. You need to understand, do your due diligence. You need to also ensure that that person is properly licensed. If anything were to happen, then you have somewhere to go. Need to understand also the type of people that are there, the leadership. It's something that you basically need to be able to have confidence in.
Okay, thank you for that. And I know we'll discuss this a little bit more in the second session, but I'm sure the listeners who are also looking at some of the slides, and I saw you had mentioned there about your risk appetite. Are you risk averse? Do you have a high risk appetite? And things like treasury bills and bonds are put as risk-free. You'll speak to us a little bit about that, because there's also this conversation that goes is like, are they very risk-free? You know, there's been an increase in the returns on treasury bills and bonds. And then people start wondering, is there a bubble that's coming up? How safe are we and whatnot? And we'll discuss that as we go along, versus, of course, you cannot compare it to something like commercial paper. And we'll discuss more on that later. So I'm sure that those are the kind of questions that listeners have, but we'll discuss it as we go along. So I'd like us to jump into the second session that's going to be dealt with by Rose Mutiso. Rose Mutiso, I'll give you a chance to introduce yourself and tell us a little bit more about what you do at Britam Asset Managers. And then Rose Mutiso is going to give us a very detailed presentation about now investing in those money market funds. We have determined we want to invest, and we want to invest in a money market fund. We want to invest in a bond fund. Barak has given us a little overview of what each of them entail. Now, Rose will tell us a little bit more about that. She'll also cover a sinking fund versus an emergency fund. You know, those days when you're added to our WhatsApp group and you're told we are having a wedding in December and we'd like you to contribute this much. Is that an emergency, or should you be having your sinking fund and putting your money because you know you're getting married? It's not a surprise to you unless you're eloping. So she'll tell us a little bit more about how to plan. Don't be adding people in WhatsApp groups, telling them to contribute 5,000 at the very least when you knew you were getting married. So sinking fund versus emergency funds. She'll also talk to us a little bit about diversification of investments, because sometimes you see there is a very good investment. It's giving you a very good return. And then you put all your eggs in one basket, and then what happens if things don't go very well there? So how do you diversify your portfolio without spreading yourself too thin? So Rose will tell us a little bit more about that. And then she'll also tell us how to sign up if you want to take up one of the products with Britam Asset Managers, because as we've heard, they have over 200 billion shillings assets under management, and they are regulated. And so these are very important things to think about as an investor. So Rose, I will hand over to you. Tell us a little bit about yourself, and then you can continue with the presentation. Thank you.
Okay. All right. Thank you. Thank you very much, Claire, and good evening to you all. Thank you very much for joining us for this session this evening. My name is Rose Mutiso. I'm with Business Development with Britam Asset Managers. Investments is all I've known my entire working life, to be honest, having joined Britam quite young, straight from university, and gotten into this world that, to be honest, I never had any interest in. To give you context on how uninterested I was in investments, I was those kids when your parents would be watching news, then it gets to the business section of the news, and then they are there monitoring what are their share prices, what are the share prices for Kengen, and my parents were very keen to see how the shares are performing. I would be so bored and wondering what time will this news come to an end. And then I end up coming straight into that, into investments, an area that I had never really focused. So it's interesting, to be honest, and it's been quite a journey for me. That's what I'd say. I've really learned a lot over the years working with Britam, and generally just getting exposed into the investments world and getting to understand how to have your money working for you, because at the end of the day is having, when you're doing your investment, is having your money working for you at any point in time. So I'm happy to be here this evening. And for now, for the next section, we're going to now look at then how do you have your investments, and more specifically in money market and bond funds, which are under unit trust, working for you and earning you extra income as you go about your day to day, because we all have what it is that we focus on Monday through Friday. But at the same time, we still have avenues where we could have our money working for us and earning us an extra income as individuals and as businesses at the end of the day. So I'll get started by just highlighting the types of income that we know, or we might have come across. So ideally, we do have two types of income. We have active income and passive income. Active income is what you wake up to do, is what you earn through what you wake up to do on your day to day. So probably you're employed, you earn a salary, you have your monthly paycheck, you run a business, you make profits at the end of the every often as you run your business. You do consultancy, you earn your fees or your professional fees, you're in sales and you earn commission. So ideally what it is that you wake up to do actively every other day to earn an income, that's what we call, that kind of income is what we call active income. On the other side, passive income is ideally where now your money is working for you. You are not directly involved. What you've done is you've earned your money through your active day-to-day business or ideally employment, and then now you have avenues where you've invested your money and the money is earning you extra income up and above what you've invested. So that's what we call passive income. So here we have investments, for example, what we are going to look at today, investing in money market and bond funds where you earn some interest. Probably you're investing with government in government bonds, you're getting your coupons every other 6 months. You've bought shares, and then probably the shares that the companies you've invested with are paying you a dividend every other year. You're a member of a SACCO, right? So you do have some savings with your SACCO, and your SACCO is paying you a dividend every other year probably. So passive income is ideally your money working for you as you sleep. So you know you're sleeping and you know your money is growing every other day. So today we really want to delve deeper and see then how do I have my money working for me as I go about my day to day, and as I look at how then do I continue and how do I keep making sure that I'm growing my income on the active side, and then on this other side I'm engaging professionals. I've given my money to individuals who ideally understand how the investment world works, because the truth is we'd all want to be jack of all trades, where we have what it is that we do on our day-to-day basis, and then at the same time we would still want to be able to know where do we invest, is this a good investment opportunity, and there's so many investment opportunities out there. So just to be able to separate those roles, I think what we recommend is focus on what it is that you do best day to day, and then have your money working for you and invested with professionals that understand what happens in the investments world, and they're able to exercise prudence, integrity, and do research ideally so that they can have your money growing for you every other day. So one of the measures of having achieved, or how you can be measured as having achieved financial freedom, is how when you get to the stage where your passive income is actually more than your active income. So when you get to that point where you have investments that are really earning you more money than probably your job, probably your business, or probably your what it is that you do on a day-to-day basis, then that's one of the main measures of having where you can be said to have achieved financial freedom. So I think the main message for this session is we should target to ensure that we achieve to earn as much passive income from our money at any point in time, and not having our money sleeping, just sitting idle in bank accounts, or keeping money in the house, not earning anything if there's opportunities out there. So money market fund and bond funds that we are going to discuss today fall under what we call unit trust, or mutual funds, right? So you might have come across that term, either mutual funds or unit trust. So I think it will be ideal for us to just look at what exactly unit trust means and what it entails, and then we go in, and then now we get into looking. We delve deeper into now the money market fund and bond funds, which now fall under this category of investments. So what a unit trust or a mutual fund, or ideally also called collective investment schemes, what these are is ideally pooled investments. So just to make it simple, think of it where we have a basket, right? So we have a basket here, and then different individuals contribute funds into this bucket. So we all, put in our amounts, the various amounts, and then at the end of the day, all the contributions that are made into this basket, they are invested, right? So that's what, think of a unit trust as that, contributions into a pool, and then at the end of the day, what's contributed in the pool, the money is invested. So the question is, who does these investments on your behalf? Or ideally, which entities will offer you unit trust investments? So the entities that offer unit trust funds are called fund managers. Britam Asset Managers is one of them, and we have quite a number in the industry that you've invested with, or you might have come across as you do your investment research and look around ideally on where to invest. So there's various unit trust funds that we have in the market, and just generally in Kenya, unit trust funds and mutual funds. So what you will commonly find within Kenya is money market funds, which I think are the most common. Most of us have probably invested in a money market fund. And then we also do have bond plus. We do also have bond funds. We have balanced funds, and we have equity funds. So those are the four options that you'll ideally, if you're keen to invest with a fund manager, or you're keen to invest under unit trust, then those are the four options that you're most likely going to find across the various unit trust options we have in Kenya. So maybe just to mention lightly on what the other two entail, because for this session, we'll talk more about money market and bond funds, just in passing, so that we can have an appreciation on what the other two entail. So equity funds, ideally, like the name suggests, an equity is a share. So if you're investing in equity funds, it means you're investing your money in a pooled fund that will have your money invested in the stock market. So quite high risk and very volatile in terms of returns. I think we appreciate how the stock market operates. And I think Baraka has already alluded to the fact that risk is one of the areas you would really want to make sure that you understand where you lie in terms of risk appetite, so that at least you are able to absorb any shocks that come through investing in equity funds, and ideally any other high-risk investments that are available out there. So if you're keen to invest in the stock market, but you're a busy individual, you do not have the time to find out, should I be buying Safaricom shares? Is KQ a good option? Should I be buying KCB? Is the banking sector doing well? And so on and so forth. You leave that job to the professionals, invest, just pull your funds within an equity fund, and the money will be invested in the stock market. And then you have balanced funds. So balanced funds, like the name suggests, it's a balanced portfolio, right? So you're an investor, you like playing safe, but at the same time, you do not mind taking a risk. So you're in between. So this is a kind of investment that will have your money exposed or invested in across all, I'd say, asset classes. So you have your investments exposed to the money market instruments, the bonds and the treasury bills, and then you still have part of your money exposed to the stock market. So at any point in time, you have your funds exposed to all these asset classes. And then now we have the what we call low to medium risk investors, conservative. You want to play safe. You want to make sure that what you've earned through your hard toil Monday through Friday, that is at least number one, stable, but you're also keen to have your money working for you and earning you something extra. So that's where now the money market and the bond fund comes in. So that's what unit trust ideally means, or mutual funds, just to have an appreciation of that, even as you now go into looking into what the money market and the bond fund entail ideally. Another thing that you would want to do as an investor, currently maybe you've invested, or you are a potential investor and you're wondering, I've heard so much about money market funds, I've heard so much about mutual funds, but I'm confused, to be honest. I don't know where to start. There's so many fund managers in the industry today. I think we've seen over 30, and they all have investment options for you. So probably there's that confusion. You're wondering, where do I start in terms of doing my due diligence? Because at the end of the day, I think we've already, we all want to sleep, right? You want to sleep comfortably knowing, as much as my money is working for me, At least I know my money is invested with an entity that I'm comfortable with, and it's an entity that's been tried and tested over the years. It's a stable business, and they've been able to offer these investment options for a long period of time. So what we are looking at here is ideally the stakeholders you need to look into even before you go and look for 9%, 10 or 15%. So when it comes to the unit trust or the fund management industry world, ideally, we have stakeholders that work together just to make sure that at the end of the day, what it is that you're looking at or what it is that you're targeting as an investor is delivered to you and delivered to you in the most prudent way and observing integrity as much as possible. So where do you start your investment journey if you're keen to invest in unit trust? So here you are saying, today I want to invest in a money market fund. I would want to invest in a bond fund. I've never done these investments. So where you start is, number one, you identify a fund manager, right? So you have the fund manager that will offer you the investment opportunity. So once you know who the fund manager you want to invest with, and it doesn't have to be one, it can be 5 fund managers. You do not have to really tie yourself to one investment manager. So once you know who your potential investment managers are, the next thing is to confirm they're regulated by the Capital Markets Authority. I think regulation is important. At the end of the day, in everything that you do, you want to make sure that there's someone or there's a body overseeing the kind of investments or ideally how the investments that are being done, and there's someone regulating and making sure that there's principles that govern and policies that govern the investment. So make sure that the fund manager you're looking at investing with, number one, is regulated by the CMA. How do you do that? Go to the CMA website. They have a list of all the fund managers that they regulate to offer unit trust. Besides that, now comes another stakeholder called a trustee. So the trustee is the entity that will make sure that your interests as an investor are being observed and protected. How? So trustees make sure that the fund manager is investing the funds in accordance to the policies for the various funds. And they make sure that ideally they have oversight of what the fund manager, the business the fund manager is doing, and how the money is being held by the custodian as well. So you want to confirm who the trustee for the fund manager or the investment manager you're investing with is, because at least, again, you'll be able to sleep even more knowing that there's someone that is also, besides the regulator, there's someone now who's actually overseeing the day-to-day activities and investments that are being undertaken by the fund manager. And then finally, we have the custodian. The beauty about this industry is fund managers are not banks. They do not take your money. They're not deposit-taking institutions. So when you want to invest in a unit trust, any of the funds that we've highlighted, what happens is you will go, they will tell you what the process is. And then when it comes to depositing the money, they will refer you to a custodian. So a custodian is banks that we all know of, just local banks that hold the money on behalf of you as the investor and on behalf of the fund manager. So once they refer you to the custodian, you deposit your funds with the custodian, and then the fund manager will do the business of investing. So here there's a separation of roles, because you have the fund manager whose job is entirely to invest the funds on your behalf and earn your return. And then we have a custodian whose job is to hold the money and as well as making sure that the money is goes to where the fund manager would want to invest, and so on and so forth. So these are stakeholders you want to make sure that you understand and appreciate even before you go confirm that the rate is actually 12, 13 or 17%. All right, so coming down to money market and bond funds. So we'll start by just looking into what money market funds are. And to make it simple, and maybe just to start with a comparison, a money market fund is ideally your bank account, right? So you have a bank account where you keep your money for whatever reasons. Probably you keep money in the bank for safety, because ideally, if you compare walking around with cash or keeping money in the house, it's safer in the bank, right? But I think safety with banks is also relative, because we've seen what's happened to some banks in the recent past. So probably you keep money in the bank for safety. Another reason you could be keeping money in the bank is because you can easily access it whenever you need to access it. So, and it's so easy nowadays, we don't even go into banking halls anymore. You're able to do your online banking, you're able to do your mobile banking and transact at the convenience of your digital, of the digital platforms and your gadgets, wherever you are. So accessibility, at least that's a guarantee as long as you have your money in a bank account. And then some of us, not everyone, have money in a bank account that could be earning interest. So interest is ideally pegged or dependent on the type of account you hold in the bank. And what we see as a fund manager, or what we see in this industry, is most Kenyans toil hard every day, look for money, then go deposit money in a bank account, more specifically a current account that earns you zero, right? So you're there paying your ledger fees, you're there, your money earning zero, losing value because inflation is still there at the end of the day, but you still work hard because you need more and more money. So any prudent individual or anyone out there who knows that inflation will always be there, money is losing value at the end of the day if it's not growing, then you would typically not have money in a current account sitting for more than a month, right? So you'd have money in your current account for your day-to-day probably expenses as an individual or a business. So money market fund is like that bank account. But what is the main difference between my bank account and the money market fund? So money market fund is a type of unit trust investment. I think we've already highlighted that. It's very liquid and open-ended in the sense money market funds, the way they are structured, they're not locked investments. It's an investment option where you place your funds. The money will earn interest on a day-to-day basis, and the day you need your funds back, it's as simple as placing instructions and the money is transferred back to you. So it's not a locked investment. However, some fund managers do have a minimum investment period where they say, if you place your funds today, at least before you access, give it at least a minimum of 2 weeks or a month, and then from there you can be able to access the money. So it's not locked, but some of them could have a minimum investment period. So that's one of the things you need to find out as you go signing up for a money market fund. Now, when it comes to stability in terms of your capital, money market funds come with that benefit of capital preservation. They are also very low risk investments, and they also offer diversification. Diversification is very key when it comes to investments, because at the end of the day, you want to make sure that you spread your risk, right? So how are money market funds able to achieve that capital stability? How are they able to achieve the diversification aspect? This is informed by where the money is invested. So the other thing you really need to understand and appreciate is find out where the money is invested, because it's one thing knowing your money is earning 15%, but it's one thing knowing it's earning 15% because it's invested in XY and I'm comfortable with where my money is being invested. So money market funds generally invest in an asset class we call fixed income. And fixed income is ideally what we consider low risk investments in the market. So we have quite an array of fixed income options in the market. We have investments with government, investments with banks, and we also have investments with ideally companies. So when it comes to government, we have treasury bills and treasury bonds, ideally loaning money to the government. We have bank deposits, that same banks that we all know. You go place a fixed deposit or a call deposit, and then you get a certain rate for that for the period the money will be invested. And then we have commercial papers and corporate bonds that are issued by private companies. Not always available, but as and when there's an opportunity and a good opportunity, money market funds are likely to subscribe to these investment opportunities. So if you look at those investments, number one, you'll realize there's nothing like shares. So money market funds will not invest in the stock market. Money market funds will not invest in real estate and the property and, such long-term investments. Because remember, at the end of the day, it's a very liquid investment. In the event you need your money, they should be able to give you and pay back your money as soon as possible. So that is what ideally informs the underlying investments, the risk involved, and ideally the stability of the investments that are undertaken by the funds. How do you earn a return, or how does your money work for you while invested in the money market fund? You earn interest, and the interest is earned on a day-to-day basis. So if you consider having money in a bank account, current account earning you zero every other day, if that money was invested in a money market fund, you'd be earning a return on a day-to-day basis. So that's one key differentiating factor between a bank account and your money market investment. So the interest rates will fluctuate daily. It's not a constant rate through the investment period. The rates will fluctuate daily, and that fluctuation is again determined by what are the prevailing interest rates, or ideally where the money is invested, what rates are they earning, or what are those securities are offering in terms of a return. So how do you keep tabs in terms of the returns that your money market fund is earning? The easiest way is to check on the papers. One, it's a requirement by the CMA, the regulator, to have all fund managers to have their returns published on the papers. So one easy way is to just check the papers, Business Daily, The Standard, Daily Nation. You'll find the returns published there on a day-to-day basis. Another key benefit of having your money invested in the money market fund, and it's something we are going to look in a slide, we're going to look into in a slide coming up, is interest compounding. So besides having your money earn interest every other day, that 5, 10 shillings you'll earn every other day or every other month, at the end of the month, that money will be compounded, meaning besides earning interest on your principal investment, you'll also earn interest on interest. It's quite powerful, interest compounding, but it would only make sense if you would consider a longer term investment, and that we will highlight in, like I've said, in a slide coming up shortly. They are very liquid, like we've said, accessibility, the same way you want to access your money with no hitches in your bank account. Money market fund also offer that option. The only other thing is you need to understand and appreciate is, unlike a bank account where you'll do your mobile banking, have your money on M-Pesa and be able to utilize, money market funds, remember that at the end of the day, the money is invested. So if you place your instructions and you would want your money paid back to you, it's not instant. It would, on average, and if you look at how the industry operates, on average, it takes about 2 to 3 days to have the money transferred and paid back to you at any point in time. Charges, another thing that we never really get to look into. We go undertake investments, and then when it comes to now us getting back our money, we realize it's not actually what we signed up for, because we never really get to understand what are the charges of these investments, or what am I likely to incur as I go about this investment. So how money market funds work, there's 2 types of charges. There's a management fee, which is charged by the fund manager that is doing the investment for you. On average, if you look at across the industry, on average, fund managers charge between 2 to 1.2%. And then we have tax. KRA will charge tax on the interest that you earn, and that's called withholding tax, and it is 15%. The 15% is the same across the board. That does not vary fund manager to fund manager. So those are the only 2 charges. You'll realize that there is no initial fee, meaning there's no charge on your principal investment, and ideally these 2 charges are deducted from your interest. Now, why invest in a money market fund? And ideally, number one, I think we've already said bank account, I can access my money at any point in time. What we recommend is whatever you keep in your bank account, let that be the money you need for your daily use, for your weekly grocery shopping, if you're running a business, for your expenses, and so on and so forth. Money you need to utilize in a very short period of time. But funds that you're saying you're very deliberate and you want to save for a certain goal for a period of a month, 2 months, all the way to maybe probably 6 months, have that money invested in a money market fund. Number one, we've said inflation is there. Inflation will always eat into your money. As long as your money is not growing, or even if it's growing and it's growing at a rate that is lower than the inflation rate, that means your money is losing value. Right? So if nothing else convinces or motivates you to invest, just have your money invested somewhere where at least you're able to make sure that you're retaining the value of your money because of inflation. And then if you look at the returns that money market funds pay, they're quite higher, or they're better compared to what you would earn in a bank savings account. So a bank savings account will pay you on average maybe 2, 4, 5%. Money market, if you look at money market funds in the industry at the moment, most of them are paying somewhere between 9.5%, some even going all the way to 10, 11%. So money market funds are very easy to sign up. Just make sure that you have a separation of roles. This is an investment, and money in my bank is money for my daily expenses. Do not use your money market fund as a bank account where you're investing. After 2 days, the money is out. After 1 week, the money is, you will never really appreciate the value of the investment. Coming now down to bond funds. Bond funds, again, still fall under unit trust, like we've highlighted. They more or less operate as the money market funds in terms of, if you look at where the money is invested, they invest in fixed income. But the key differentiating factor is in terms of the exposure, right? So you'll find money market funds have a limit in terms of doing longer term investments because of the liquid nature of the funds. But bond funds, because they are more of short to medium term investments where we say invest for at least a year. So at least they have that benefit and they're able to take advantage of longer term investments, for example, in government bonds and earn higher returns. So that's one of the key differentiating factors between money market and bond funds. But ideally, the way they are in the industry, they are open-ended and also quite liquid. So allow me to highlight about 2 or 3 benefits of investing in a bond fund. And what ideally an investor would compare a bond fund to is probably investing in government bonds or corporate bonds, right? So one of the key investments that we have in the market at the moment is government bonds, and we're living in such a time where Kenyans are really informed and they know they can actually invest directly with government, and there's all these opportunities that you have to even have your money growing and earning a higher return. So as we all know how bonds work, they are more of long-term investments, and then they will pay you a coupon every other year. Every other 6 months, you'll get some the interest paid into your bank account. But the main disadvantage with investing with bonds, I think we all know, is when it comes to liquidity or cashing in your investment. So bonds are long-term, like we've said. So it would not be ideal for an investor to have all their money invested in bonds, and then at the end of the day, for example, your emergency fund is in a government bond. Money you need to pay school fees in the next 6 months, you've invested in a government bond. So there needs to be a separation so that at least you have an appreciation on, if I need short-term investments, but at the same time, I also need long-term investments. So bonds are for your long-term investment options, and then the bond fund comes in for that investor who's keen to have their money invested in bonds, but the liquidity is key for them, right? So they want to ensure that as much as my money is invested in bonds, as and when I need my money, I'm able to cash in and request my money and get it back 2-3 days. I'm fine with that, compared to having to wait for a week or 2 to sell a bond in the secondary market, which comes with its own risks. So bond funds give you that benefit of knowing, yes, my money is exposed to the bonds amongst other investments like bank deposits, because it's not just bonds alone. We also have bank deposits and commercial papers, but a bigger percentage of the money is invested in government bonds. But at the same time, I can access my money as and when I need it. So that will be able to help you achieve that liquidity. The other thing is it is suitable for investors who are seeking regular income from their investment. So the same way you'd go to a bond, because every other 6 months you'll get your coupon, bond funds will still be able to pay you your interest on a month-to-month basis, or as and when you need your money, or as and when you need to access the interest or the returns you've earned on your investment. So they also offer, just like money market funds, they offer the benefit of interest compounding, meaning you're also earning extra up and above what you're earning on your principal amount. And then the charges, again, are more or less what you will be charged on your money market fund. On average, about 2 to 1.5% in the market, and the withholding tax remains to be the same. So bond funds have really come in to help those investors that are keen number one, to get a very attractive return, right? Something close to what the government will offer you. So it might not really give what the government is offering, 15, 16, 17%, but it's still a double-digit return, but with the benefit of liquidity and protecting you ideally from the risks that come with pricing and having to sell bonds before maturity in the secondary market and selling at a discount and so on and so forth. So coming down into look at now to see the suitability of these 2 options. So what is suitable and when is it suitable for me? Ideally, you'll realize the 2 options are suitable for you. It depends, again, with your risk profile and, again, the goal. I think at the very beginning of this session, Barak has already alluded to the fact that you need to have a goal that you're investing for, right? So depending, again, with the goal and how long you're looking at achieving the goal, that, again, also informs which product or which investment fund would work for you at any point in time. So if you look at the risk profile for the money market funds, I think we've already said they're quite low risk. And then bond funds are low to medium risk because of the most of the investments being done under into the bonds, which I think we all understand. In the event that interest rates continue going up, that means the pricing of the bonds is affected, and that means probably in the event you want to sell before maturity, there is a chance that you could sell at a discount. When it comes to liquidity, consider money market fund your very highly liquid fund, whereby if I need money, I can quickly access my money in a money market fund. Bond funds are liquid, yes, but the recommendation is consider a bond fund to be like more of a longer term investment compared to your money market fund. So money market fund is your typical very short term investment. Anything a month to 6 months, money market funds are perfect for that. But for those goals that you're saying, I think I need to save for the next for another 6 months, another 12 months, another 2 years, 3 years for me to be able to actualize this goal, then a bond fund would be ideal for such kinds of investments. What we actually recommend, consider at least a year if you really want to earn the maximum return that the bond fund would be offering. But for money markets, anytime you feel you have money, yes, it's growing, it's working for you. But if you have a need, you can quickly cash in. Money market fund is that. So bond fund, be more committed, be more deliberate with that investment, because the return is quite good and you want to make sure that you get the maximum out of your investment. When it comes to the potential returns, money market funds in the industry at the moment are paying on average between 9 to 11%. Bond funds are paying 11 to 13%. So if you look at the return, bond funds are the return is quite higher compared to money market funds. Looking at how the interest rates are in the market today, we are seeing there's more appetite for the government to continue borrowing, and they're borrowing at quite high interest rates. It's quite expensive for them. So that means the interest rates continue going up for you as an investor. So if you're keen to invest in the bond funds, I think one thing you need to look forward to is at least a growing return, at least between now and the end of the year, as far as our outlook is concerned. The other thing is the goal, right? So what are you really investing for? So if you look at money market funds, again, it's more for your short-term, very, very short-term needs that you need to actualize in a period of a month, 2 months, 3 months, or 4 months. So I think top of mind is emergency fund, right? Have we, living post-COVID, I think what is obvious and what we all know right now is we all need to have what we call a rainy day fund, right? You have a job. You could wake up tomorrow, you're on half salary, or that job, the job is no longer able to pay you that salary. So you're on a pay cut, you know. So how do you make sure that you sustain your living standards? How do you make sure that if I lose my main source of income today, whether it's your salary, whether it's your business that you're running that's been making you profits, how do you make sure that in the event this is no longer coming through, how am I able to sustain my living standards and ideally for my family? Have an emergency fund. And it's recommendable to have an emergency fund that can take you through at least 6 months in the event your main source of income was to stop or will not be there today. So emergency money market funds are very good for emergency funds, because the main target here is you're looking at an investment where in the actual as the actual emergency happens, you're able to quickly request for the money and you're able to take care of the emergency. But the goal here is have the money at least invested in an avenue where you're earning a return, bare minimum, that outdoes inflation. So if you look at the inflation rate at the moment, we are at about 7.3 thereabout. So being in a money market fund that pays you 9-10%, at least you know your emergency fund, the money is not losing value, and the day that you need your money back, you're quickly able to cash in. What we also recommend is define what an emergency is to you, because I think things just come up and there's always need for money, right? So every other time there's always emergency. So make sure you define what an emergency is to you, or how an emergency looks like, so that at least by the time you're withdrawing money from your emergency fund, it's to take care of the actual emergencies that you've been saving up for. Schools have just opened, very short-term investment goals. Working capital for a business, you have some money, you run a business, you have some money, you have $500,000, $1 million that's sitting in a bank account that probably you planning to, get some more stock for your business in a period of a month or so. Instead of having it sitting in a bank account, that money can be in money market fund. Holiday planning. I think we are approaching the holidays, November, December. So if you're keen to go for a holiday for the Christmas holidays, money market funds is really perfect for you saving towards that particular goal. And then we have life events. We have weddings. We are growing families, we are starting families. We have all these things that happen as we go about life and as we grow as individuals that demand that we have some money to be able to take care of that. So weddings, anything you're planning for in the short term for a period of a month, 2 months, 3 months, a money market fund would be ideal for that. So money market is good for short-term savings and short-term goals that you're looking at achieving. Then now, if you look at bond fund, here now comes in your medium-term goals, right? So you've already, you're now keen and you're saying, in the next 1 year, in the next 2 years, I want to own my home. In the next 1 year, I want to own a car, right? So probably you'll say you're looking into getting a loan or a mortgage, for example, to be able to own the home. So how do you at least work on raising the deposit that will be needed for you to be able to secure that the financing that you require? So the bond fund is ideal for that because you can save consistently for a period of a year or 2 years, knowing that by the time I'm hitting year 2, I'll have raised my deposit. My deposit will have earned something significant that can help me take care of fees, for example, if it's the mortgage processing and so on and so forth. And then after that, you can withdraw the money, take care of your, get to be able to secure your asset and be able to achieve that. Project funds. So now you've already acquired your piece of land and you're saying in the next 2 years, in the next 1.5 years, I want to develop my, I want to build my family home, or probably you want to put up a rental or a commercial property. So again, bond fund very good for such goals for at least a period of 1.5, 2 years, so that you can be able to save deliberately for that particular goal. Sinking funds, I think Claire has already alluded to this. A sinking fund is ideally money you've set aside for expenses that you anticipate, right? So unlike an emergency fund, which is something that, yes, you know, it might likely, it's likely to happen, and you're protecting, you're ideally planning in advance for that. A sinking fund is ideally what you know that will happen. So for example, you have a loan that you're saying, I want to put some money aside to protect me so that at least in the event I don't have any source of income and I have a loan that I'm supposed to pay back for a certain number of years, I have a fund that will protect me and will help me be able to take care of my debt. You probably have a property, right? You have a commercial property that you need to maintain. You have some rental apartments somewhere that need maintenance. And I think these are the kind of investment that always need money. A tenant is moving out, you need to do repairs and so on and so forth. So a sinking fund is for such kind of expenses that you know will always happen. So you're preparing in advance for this kind of expenses. We have a reinvestment of your dividends and your coupons from your other investments. If you've bought your shares, if you've invested with your circle, you have your circle savings and you're getting your dividends paid to you annually. One way to reinvest and have that money again working for you is consider investing in a bond fund. Every 6 months, you get your coupons from government bonds or corporate bonds that you've invested in. Another way to reinvest that money is considering investing in a bond fund. So at any point in time, just try and look. I have this sum of money. I think I'm very keen to have it invested or earning something extra from in an investment for a period of maybe 6 months to a year. Then that would guide you on where you'd be able to place it. Retirement planning and investment of retirement proceeds. If you're approaching retirement, you could be very deliberate and have a goal where you're saying, besides my pension plan that I already have probably with my employer, I also want to have some savings that will complement my pension, right? So bond fund would be a very good consideration for that, where you're saying, I want to be deliberate every other month, put aside some savings so that if I'm approaching retirement in the next 5 years, I'll have my pension and I'll still have my savings X amount that together will be able to sustain me for a good period of time as I go about my retirement. And then the other benefit or the other thing you can consider investing in bond funds, again for longer, you'll find you can be able to go secure a loan from a bank or a lending facility. And then the advantage, how that would work is you'd have your money, you still have some money, but you want to get some kind of financing, for example, from a bank. You can have your deposit or your lump sum invested in a bond fund. It's earning you interest. And then you can use this investment as security to get that financing from the bank. So that's another benefit you would consider investing in a bond fund. And the benefit is you have your money working for you, getting you some kind of return. And this return is what you can actually use to comfortably pay back your debt, knowing that my money is growing and I'm able to sustain and pay back my debt as and when I need it. So bond fund has there's quite a number of goals you can save up for. Anything a year and above, bond fund would be ideal. But anything where you need to quickly access the money and take care of these goals and these kinds of expenses, then money market fund will be ideal. And then the other thing is affordability. Money market funds, generally, if you look at the industry, minimum is 1,000, very affordable. And for bond funds, at least 5,000 shillings, you can be able to open an account and get started on those investments. So then I think the question is, when it's all said and done, how do these investments help me achieve passive income? How do I have my money in a bond fund And as I go about my business every other day, I know my money is working for me and earning me something extra for my future. So here comes in compound interest, right? The power of compound interest. And maybe just to start out with a quote from Albert where he says, compound interest is the eighth wonder of the world. He who understands it earns it. He who doesn't pays it, right? So compound interest is ideally where your money is, the funds you've invested or your money is earning interest on interest besides your capital investment. Very powerful, but in the long run. So it accelerates the growth of your savings and investments over a certain period of time. So here is where the rubber meets the road. So here we are going to look at 3 individuals today and see if I really want to earn some significant passive income from my investments in money market fund, because probably you've invested in a money market fund or a bond fund, and the kind of returns you get on your investments are not really, you don't see how that money can help you earn something significant and some serious passive income in future. So the goal here is, number 1, start early, right? Start early. And number 2, have a longer term view, right? Rome was not built in a day. If you're really looking at growing your investments to a certain extent, then you really have to be deliberate and give it some time, because compound interest comes into play in the long run. So here we're going to look at 3 individuals who say, from today I want to be very committed, do savings worth 5,000 every month from my income, invest in a money market or a bond fund. Let me work with a bond fund, for example, and we are working with a very decent return of 9%. So you've seen right now we are operating in an environment where the funds are paying between 11 to 13%. But here we're working with a decent return of 9%. So we're saying these individuals are putting aside 5,000 every month, and we're going to look at 3 different times in their lives and see how this will be able to help them achieve passive income. So starting with a 25-year-old who says, from today I want to commit 5,000 per month to be able to enjoy the compound interest and earn some passive income, ideally from my savings. So a 25-year-old, by the time they're 45, which is 20 years down the line, in terms of total savings, they'll have saved 1.2 million. But that 1.2 million in return will have earned them 2.1 million in interest. So this 2.1 million is what we are calling the passive income. Their money has worked for them and earned them that kind of return. By the time they are 50, you can see the kind of money they are making. The return is actually almost 3 times the savings they will have made within the 25 years period. By the time they are 60, you can see the kind of returns they will be making. Look at a 30-year-old who only has 15 years by the time they are 45 years. So you see the savings are quite minimal, because again, time comes into play. And if you look at the return, is also more or less what they'll have saved, mirroring more or less what they'll have saved. Look at by the time they are 50, at least, because there they have the time. They've given it time for the power of compound interest again to come into play. And then look at by the time they are 60, they'll also have made some significant return on their investment. Look at a 40-year-old who only has 5 years, right? So they only have 5 years to save the 5,000. They'll have saved the 300,000. But look at the interest. So I think this is again to highlight the fact that if you look at the kind of returns you earn month on month, in the short term, you would not really understand how these kind of returns, will really make an impact or help me achieve my goals that I'm looking at achieving in the near future. However, if you're committed and deliberate, and remember, it doesn't have to be 5,000. You can decide to set aside 50,000 every month. It can be 100,000. At the end of the day, you know what it is that you want to achieve and the time frame that you're working with to be able to achieve that. So I think this is now demonstrated and brings out this aspect or answers the question, can I really earn something significant from my investments in money market, ideally a bond fund, something significant that I can say I'm earning some very good income on my investments in these investments. So I think this will be able to highlight this for you. Just be deliberate, right? I think Barack told us for him, he's committed to a standing order. He has a standing order where he knows every often I have some money that's going into investment. So consider setting up a standing order so that you don't have control where every month you are the one who has to initiate these savings. Standing order would be perfect to be able to achieve that discipline, especially. And number 2, think longer. think longer. If you can think longer, you should be able to achieve some significant income from your investments in these funds. And maybe again, just to, trigger our minds a bit further. So here's a story of 100 young people who are now aged 25. So we want to see how things will be for them 40 years later as they hit retirement. So by the time they turn 65, out of these 100, one of them will be rich, 4 of them will be financially independent, 5 of them will still be working. So you retire, you've hit retirement age, but you still work because you never made the right plans as you were, when you were young and you were able to work and you had the energy to put money aside and save and be deliberate about your future and your retirement ideally. 12 will be broke, 29 unfortunately will be, will not be there. And then we have 49 of them who will be dependent on friends and charity. And I think this is what we see in a typical African household, right? Where you retire, and now because you took care of your children, they went to school, they are now your retirement plan. They have to take care of your retirement and so on and so forth. So I think the message here is start early. And number 2, be very deliberate. Think about how you want to retire. How would you like your net worth to look like by the time you retire, so that at least you know what it is that you're working towards to by the time you hit your retirement age, and you're planning ideally well in advance. So finally, within Britam, we have the 2 investment options you can consider and sign up. We have the money market fund and we have the bond plus fund. How do you sign up? We have 3 options. 1, we do have financial advisors. I think where you are within Kenya, you've most probably seen a Britam office. We have quite some good presence across the country. So we do have financial advisors that are able to guide you ideally and help you sign up, or even give you more information as far as these 2 investment options and many other investment options that we have within Britam. So you can contact any of our financial advisors, or walk into any of our Britam offices countrywide to be able to be assisted on how to sign up. We do have digital platforms. So if you're comfortable and I think I have enough information and I want to do this by myself, we do have our digital platforms. We have an app and we do have a portal where you can be able to log in and to sign up and register, create an account, and then from there self-service through this platform. So you can be able to top up, withdraw, and do all transactions online. So you can access the Britam app via Google Play Store for Android users, and then for Apple users, you can be able to access the app from App Store. So it's called My Britam app. So if you go to those 2 platforms, just search My Britam app. And then for the customer portal, go through the Britam website. You'll be able to see the customer portal that you can also be able to log in, register, and create your account. Finally, we also have a USSD option, *778#. You can actually try it right now. Dial *778#. If you dial, there's quite a number of products that are available through that platform. There's money market fund and there's bond fund. So you can be able to pick which one you'd want to sign up, and you can also take up both options through these platforms. So just to highlight, at Britam, we are currently running an offer on the bond fund where we are saying between now and October, we would really want as many people as possible to sign up and take advantage of this quite attractive investment. So what we are saying right now, if you sign up between now and October, we have a minimum investment period of 1,000. If you've seen what we've highlighted across the industry, the minimum is 5,000. But we are saying come in today with that minimum of 1,000. We'll accommodate you with that 1,000. Minimum is 1,000. There is no maximum. If you have more money, the more money you have, then we can be able to take up any amounts. At the moment, the fund is open-ended. We do not have a lock-in period. So the only thing we are saying is minimum 2 weeks. So if you sign up today or invest your funds today, we do not allow you to withdraw at least before the initial 2 weeks are over. But after the 2 weeks, you can be able to access your funds. But remember, as we've highlighted, we do recommend for a longer-term view, right? A longer-term vision as far as this investment is concerned. So don't come in for 1,000, and because now Britam has said 2 weeks, let me now do 2 weeks. Then after week 3, I can withdraw my money. So be deliberate, ideally. And then we are not having any penalties on an early withdrawal. So this is an offer we are running from August to October. Come November, we're likely to have different features, and which will be communicated as and when we get to that point through our platforms and through our financial advisors. And ideally, if you can be able to call our officers for any information. So take advantage of this opportunity to sign up to the bond fund. Money market, the minimum is still 1,000. Money market is very affordable, still very open and very liquid. But for bond fund, after 3 months, we are likely to review the features. But right now, you can invest as is. So minimum is 1,000, which I believe we can all afford and sign up. So just to wrap it up, gain control of your money, or the lack of it will forever control you. How do you reach out to us? These are our contact details. That's our telephone number. You can be able to call our call center. They'll be able to direct you or be able to assist you on any matters on investments that you have. And then that is our email that you can be able to drop us an email if you need more information, if you need someone to come meet you, engage you further as far as these investments are concerned. We are available, and we are happy to come even discuss further with you as an individual, with your family. You know, if you run a company and you'd want your employees to be able to appreciate these investments as a way of building their capacity, we are happy to do that. Just reach out to us. So I think I will wrap it up there, Claire. And at this point, I'll hand it over to you. Thank you.
Wow, wow, wow. That was an awesome presentation, Rose. I mean, I've learned so much. I mean, I don't know if you have not signed up for the Abojani Masterclass. I don't know what you're doing, because just from this session, I have learned so much. And that's why I'm even understanding how people were able to do the 1 million challenge and hit that amount, because who else is going to bring you such reputable firms as Britam Asset Managers? I've learned so much, and I'm feeling like I need to get onto that USSD after this session, because wow, the bond fund has been really attractive to me. I'm thinking double digit, and at the same time, there's still some liquidity. Of course, you don't want to keep it for 2 weeks, but there's the liquidity. That is awesome. So thank you so much for that presentation, Rose. And I think also what you said is that if you have not learned anything from this session, please be cognizant of the fact that inflation is there. So if you let your money just sit under your mattress or in a current account, you're not helping yourself, because we all know what 1,000 bob could do last year cannot help us this year. I mean, sometimes you go to the supermarket and you're seeing your bill is 3,000 and you're like, I just got 5 items. Where has this money gone? You're trying to add up. Was there a mistake? There's no mistake. So inflation is here. So make sure that your money is working for you, and money market works really well, or the bond fund. So thank you so much for that. And I also liked another thing that you mentioned. So that you can sleep well at night, also do your due diligence. You know, there's sometimes you go to the paper, you said that these money market funds are in the newspaper, and you're just looking for the highest, which is the highest yield, but you don't even go and understand where have they invested that money. Is it just in commercial paper? Is 80% in commercial paper? Is the rest in treasury bills and whatnot? And you have to understand that really before you go and pick whatever you're picking. And I just like to give a little anecdote of something that happened to somebody I know. And they had done that thing of going to the newspaper and let me see which asset manager is giving the highest return. And unfortunately, that asset manager was investing highly in commercial paper. And that was for an organization which ended up going into liquidation. And they ended up not being able to withdraw some of their funds. So it's really important to go to a reputable firm. Don't go to a firm that you've never heard of, that you don't understand where they're investing. And that's where Britam Asset Managers come. This is a brand that is trusted by other brands. It's been there in the market. We have seen what they can do. It's trustworthy. So thank you so much for that presentation, Rose. Now I can see there are so many questions in the chat box, and I want us to get straight into it because there's so many questions that have come up. And I'll let you take a sip of water, Rose, and I'll let Barak handle the first 2 questions, and then we'll go back to you, Rose, once you've gotten that sip of water. So Barack, I'm trying to keep myself from saying Barack Obama. It's Barack Obatsa. So there's a question here, Barack, from Peter Mogere, and he's saying, and it's the question I had actually mentioned, and I knew it would come up, with the recent occurrence in Ghana where money invested in government bonds and treasury bills were only refunded to investors at 50%. Don't you think the Kenya bonds and treasury bills shouldn't be regarded as risk-free, especially since several economies' opinion economic leaders' opinions have predicted that Kenya might be headed towards Ghana way. Is that true? If not, what is the government of Kenya doing differently to categorize bonds and bills as risk-free? Thank you. So Barak, you can take that question first, and then we'll go to another one.
Yeah, thank you very much. I think just to say that's an interesting observation. Of course, Ghana has gone into a little bit of distress. And there are, of course, discussions to restructure their bonds. But what I can say is that, I mean, if you can imagine if government bonds go in that direction, then it means any other investments in that economy are actually in serious trouble. But having said that, if I look at Kenya as it is now, if you look at our debt sustainability as it is now, I think our debt is still sustainable. Obviously, the government needs to be very, very careful in how it borrows in the market. It needs to actually undertake what we call fiscal consolidation. That is trying to increase revenues and also try to cut down on expenses so that our debt continues to be sustainable. I mean, all the assessments that have been done, yes, it's not good for us to continue borrowing a lot, but as it is now, even if you look at IMF and all that, they'll tell you that Kenya is still, things are still okay. Kenya is still okay. I mean, we can still sustain our debt. So I mean, at least for the time being, and maybe for quite a foreseeable future, I don't see the risk of similar risk like Ghana. And if you look at what the government has done, I know it might evoke different emotions, but having some of these tax measures, some of them, is basically to continue making our debt sustainable. So I don't see us going the Ghana way, at least. Yeah, I don't see that happening.
Okay, thank you for that. And then Caroline Murimi is asking about the Bond Plus Fund, which Rose tackled. Is it new? Is that a new product? You mentioned that until October, you can join for as little as 1,000. Is that offer? It's usually 5,000, but you can join for 1,000. Is it a new product?
What I will say is it's not new, but it's a revamped product from what it was. So it is a revamped product with maybe more user-friendly and accessible features than it has been. So it's a revamped product. It's a very revamped product from what it was. Yeah, so that's what I can say for now.
Okay, thanks. Wilbon Mutai says the difference between Bond Plus and money market fund. I think Rose tackled that very well. So let's go to another one here. I'll give that to you, Barak, and then we'll go back to Rose to take some of these questions. Mwangi is asking, what would you advise a young person who's 18 to 25 years about investment? And you spoke a little bit about that, the risk averse versus high risk appetite and whatnot. But what one tip can you give Mwangi, who is a Gen Z? This is Gen Z. What can you tell them? You know, many of them have that idea of tomorrow never comes. I'm going to live for today. Tomorrow will sort itself out. So what can you tell this person?
Well, what I can say, start early. I mean, the habit of investing is very interesting. The earlier you start, you embed those habits in your mind. And this is what makes the difference between people who are able to even transfer intergenerational wealth to their future generation. So if that person was to start early, then as you can imagine, he has so much time. He can be able to even take risk that maybe 10, 20 years later he could not be able to afford. But that person can be able to afford he has time. There is time diversification. There is time for him. So there is time for those investments to fluctuate, because investments also sometimes have a tendency to fluctuate. But that particular person has so much time that if he takes the correct investment, yes, there will be fluctuations, but the tendency of that investment is basically to go up, and that person will benefit quite significantly.
Okay, thank you for that. Mary Mulwa says, very informative, actually an eye-opener. Thanks for that. Coming to you, Rose. Mike here is asking a very interesting question. And to you, Mwangi, who had talked about some investment advice, just look at that slide that's on the screen right now of the savings you put at age 25, that 1.2 that now gives you 2.16 million shillings interest in 45 years. So start early so you can get more. So Mike is saying, Rosa, how does one switch from money market to bond fund, or vice versa? Does one get charged for switching? I think that's a very interesting question.
All right. Thanks, Mike. Yeah, that's a good question. So ideally what switching means is moving from one fund to another. Can you do that? Yes. Are there charges? No. So process is quite simple. You will just give instructions and say, I would wish to switch my money from money market to bond fund, or the other way. So it's very simple, because you would either have to do it manually, right? Signing a form, or you can actually do it through our digital platforms. So that's why I also really, really insist that if you've invested with us already, download the Britam app or sign up through the customer portal to have link or to have access to our digital platforms. Because if you have the app, you can actually go to your investment account number and initiate a switch from there, and it will be done. And absolutely free. There are no charges incurred.
Okay, thanks for that, Rose. Alex Sananka says, very good explanation of the money market funds and its advantages over current saving accounts. There's a question here, which I think you already tackled, Rose. Princess Iguchi says, why does partial withdrawal from money market funds have to take 3 to 4 days? And I think you already explained why and the kind of investments that have been made, and so it takes a bit of time there. So I'll leave that. Let me sample 3 other questions. There's so many questions. If this is Brian Kemoi, if you take away management fees and with the withholding tax from the interest in money market funds, you'll be operating below inflation rate. How do you ensure that doesn't happen? I think you need to clarify on that. And I think that's a very good question, because sometimes people usually ask that question. You already tackled it, but you can re-tackle it. When you talk about that 9.5% or that 13%, it's the management fees, that 1 to 2.2% has already been deducted. I think you need to clarify for people, because sometimes people think, okay, 13%, so you remove 2%, it's 11%, then we have withholding tax. So just clarify for that, because that's a question that usually comes up quite a bit.
Great. That's a good question, and I'm happy people are seeking clarity on that, because something I mentioned is people never really ask about charges. So when it comes to the daily returns you see that are published on the dailies or what ideally your fund manager declares at the end of the day as you return, most of them for the daily return is usually net of their management fees. So which means if they say today the return is 12, they've already taken care of their management fees, right? So the only thing that you pay from that rate for that particular day is withholding tax, which is 15%. So the question on inflation is a very valid question. So give an example of money market fund offering a return of 9.5. If you take 9.5 and then deduct the 15% withholding tax, I think it comes to about 8 point something, right? After just do 85% of 9.5, then you'll get, it comes to 8 point something, which is still better and is still higher compared to inflation, which is at 7.3. So I believe that still, even after the charges, most money market funds will deliver a return higher than the inflation rate. Not unless the inflation rate is really, really high in the market, which again would inform an increase in interest rates in the market. So it's always a cycle. But as it is right now where we are, most money market funds are paying a return that's outdoing inflation.
Okay, thanks for that. Ernest is saying, great stuff. I needed this like yesterday. A lot of us did need this like yesterday. But Today is the next best day, so that's okay. Pauline is asking, what are the implications when bond funds are withdrawn before a year is over? So you talked about that special offer until October, but then generally it should be 1 to 3 years. So if I withdraw before that time, what are the implications?
So I think the offer, what you're running right now is just will apply. I think once we change the features. So what we are saying right now, between right now and October, if you come in and say September, you want to withdraw your funds, you'll be able to access because it's within the offer period. But now come November, what we are saying is we are likely to increase the minimum amount to 5,000. So anyone who comes in from November now will have to do the minimum of 5,000. Again, anyone comes in from November going forward, we'll have to look into a minimum period. So if you've come in before, you should be okay. But now the features will apply to the new entrants that come in from November going forward. If that,
okay,
that makes sense.
Okay, thanks. As you've always heard, mapema ndio best. So take up the offer when it's still there. And this is a good question. I'll direct to you, Rose, and then I'll go to Barak to take two others. Art is asking, can the diaspora invest in the money market fund? And if so, how do they go about it?
Good question. Yes, diaspora can invest, even foreigners invest, to be honest. This is one of, investments have no limitations. Jurisdiction is not a concern. Nationality is not, as long as you have the proper KYC paperwork, ideally you should be able to invest. So a Kenyan in diaspora can invest. I believe you have your KRA PIN, you have your ID or your passport. So it's very as simple as we can send you what you need to do. So the forms to be able to sign up, we can be able to send that to you on email. You do all the paperwork, scan it back to us. So because you don't really need the physical copies, you can do everything on email, send it back to us. When it comes to making the transfer, we provide you with our bank account. You can be able to do the transfer. We have Kenyans in the diaspora who use M-Pesa. So the money market fund has a pay bill number. The bond fund also has a pay bill number. So you can be able to send in your documents, send the money through the pay bill number for the particular fund you want to sign up. And then we create the account and get started. So you don't have to come here in person. You don't have to, someone doesn't have to come to where you are. We can transact and do everything online.
Super, everything digital. Thanks for that. Artie is also asking about more information. If they want to invest, you can pull up that slide for them, for anyone who missed that, so they can take the phone number, they can take the email and whatnot. I'll direct this question to you, Barak. I'll just take two more and then we can bring this session to a close. Ephantas Migui says, if you have the money market fund and you withdraw after a short period, you will notice that the small interest that you have earned will then be eaten by M-Pesa to account transactions, 2% management fees and 15% tax. So just debunk for him what are the implications of early withdrawal. And I think both you and Rose have really said it should not be so like 2 weeks. Even if it's a liquid investment, yes, you're not putting it for 2 weeks. You need to have some time horizon. So it's not for 2 weeks, I'm removing, 2 weeks, I'm removing. So just reiterate for this listener who wants to invest, about as much as it's a liquid, money market funds are liquid, you should still have a bit of a horizon, a time horizon to enable you to gain some decent interest.
Yeah, certainly. I think you need to be patient, and anything good comes with patience. So you should not rush to remove your money unless it's absolutely necessary. But even having said that, the fees that we charge is based on the number of days. So we will not charge you that 1.2% or 1% for the time for just at once. It's accrued, and therefore it is just consistent with the number of days. So you'll not get a full fee. 1% or 1.2% is an annual fee, not for the short period maybe you'll have invested. Of course, government mandates that for interest-bearing instruments, unless you are tax exempt, then you have to pay interest. Even for bonds, if government pays you a coupon, then you have to pay interest. So unless it's maybe one of those few bonds that are exempted from taxes, but ordinarily most bonds you also if you invest directly, you need you'll be required to pay interest, withholding tax on the interest.
Thanks for that. Yes, unless it's an infrastructure bond. Now, there is one Anne who's saying, thank you, Abojani and Britam, great session. Thanks for that. Jeffrey says, very nice information from Rose. Thank you very much. And again, thanks so much to the organizers. Thanks for that. Rose, I'll let you take this last question. This listener is asking, how do you transfer a bond from a nominee account to your individual CBK account and the charges incurred, or even vice versa? There's sometimes, this DOE CSD has come in, and when you're filling in, there's a place for choose your preferred broker or whatnot. How does one go about that? Or if they're using a different fund manager or a different broker, how do they change that?
Good question. And allow me to highlight that when you're investing in a bond fund, the fund manager is not buying a specific bond for you, right? So if there's an infrastructure bond that's just been issued for 7 years, for example, paying a return of 17%, when you subscribe to the bond fund, the fund manager will not be buying that bond for you. What will be happening is you're investing in a fund that one of the areas they will invest in is government bonds, right? So it's not one bond, it's a variety. So I think that needs to come out clearly, that if you're investing in a bond fund, you will never really know that my money is in this infrastructure bond, something, or if it's a fixed coupon FX, something, you will never really know the details. You'll just know I'm in a bond fund, my money is exposed to bonds, and I'm earning X return. So there is no way you'd transfer a bond to, if I got the question clearly, there's no way you'd be transferring a bond to us because, yeah.
Okay, thanks for that. Yes, go ahead.
Just to add to that, I mean, if you've bought a bond from one broker and you want to change, ideally you should visit or contact that broker so that the transfers can be initiated through the central bank,
Okay, thanks for that. Yes, and thanks for clarifying that yes, it's not one particular bond that they're investing in. It's a variety. That's why it's a fund. So they'll pick the infrastructure bond, they'll pick the fixed bond for 2 years, for 5 years, for 7 years. So it's a variety. Thank you for that clarification. And that's why you need to sign up for this Abojani Masterclass. The next class, the 51st class, is starting on 11th of September and will be running till 28th September. And this is just one of the nuggets of wisdom that you can learn from the Abojani Masterclass. There's so much unit trust that we've talked about today, treasury bills and bonds. We'll talk about stock market, SACCOs, and so much more. So by the time you are done with the masterclass, you will have a very good understanding of how to diversify your portfolio. Remember, we have just discussed that you don't want to put all your eggs in one basket. So you need to sign up for the next Abojani Masterclass, and you need to sign up for that Britam Asset Managers, whether it's the bond fund or the money market fund. And it's so easy. You don't have an excuse. You know, the way you say, like, I don't have time to go to the office. USSD is there. You can give them a call and it will really be, and they said they're with you every step of the way. So they're there to help you. And I think this has been such an informative session. Thank you so much, Barak, and thank you so much, Rose. And at this point, I'd like to hand over to Robert from Abojani just to give us a few words on what else we can expect from the Abojani Masterclass and other sessions such as this with reputable firms such as Britam Asset Managers that we can expect in the future. Robert?
Yeah, thank you very much, Claire, for the great presentation and moderation. And I want to thank the Britam Asset Managers team. So the challenge that usually you have is that people ask us a lot of questions about companies such as Britam. And I think it is an honor to have them speak about what they're offering. And I believe that helps in terms of boosting investor confidence. So going forward, we are going to bring more of such sessions with Britam. They have several products, and we always encourage everyone that the best thing to do is to get started and be consistent. Just like Barak has said, when you start and you are consistent, that in itself is education, because it teaches you the best way to invest, and just keep going as you move towards your goals, which need to be clear. So thank you very much. You can sign up for the Abojani Masterclass, and we'll be having the presentation on our Telegram channel. Also, the recording will be available on Britam's YouTube channel. So please interact with the brands on Twitter and keep engaging, so that by the time you're investing, you have full information that you need. Thank you, and back to you, Claire.
Thank you so much. And I think, Robert, something else you can mention, just like Britam has that early bird offer for the bond fund. What early bird offer does Abojani have for the next cohort? If you sign up by what date can you get the early bird offer? Is it still available?
Yeah,
or you can tell us a little bit about the cost?
Yeah, sorry. So if you sign up by tomorrow, you'll pay 4,500, but from the 1st of next month, it will be 5,000.
Okay,
so you have
super.
a great opportunity to take advantage of that affordable rate that you give, so that as many people as possible can join the masterclass. Thank you.
Okay, thank you so much for that. And just like that slide that Rose had put there, we don't want to be the ones at the bottom of the pyramid. We want to be rich and financially independent. So as much as you've consumed this content, don't just say, oh, I went for a masterclass and I learned so much and I now know about bond funds and money market funds. Can you act on it? Okay, so you don't just consume information. Can you act on it? So those contacts are right there on your screen, that telephone number. Take a screenshot if you need to. The email is there. You can take the USSD and act. Mapema and your best. You know, finance, you strike when it's hot. So thank you so much. And thank you so much for active engagement. Our comments section is so full of so many comments. If we had more time, we would go through each of them and we would even give you a chance to ask questions live. But in the interest of time, we will need to bring this to a close. But for more of these sessions, you can always sign up for that masterclass. And as Robert has told you, if you sign up by tomorrow, you pay 4,500. Thereafter, it's 5,000. So thank you so much. Thank you again to Barako Batsa, and thank you so much to Rose Mutiso. Thank you to Robert Ochieng and the whole of the Abojani team. And thank you so much to our listeners. We are happy that you have found this session informative, as you have indicated in the chat section. And until we have another session again, I'd like to wish you a very good evening and invest. Don't just sit on that information, invest. Okay? Okay, so have a good evening.
Yeah, thank you, Claire. And I would just want to appreciate Barak. Actually, is the first ever fund manager CEO to engage Abojani community and present to us. So we are really grateful for that honor. Thank you and good night.
Thank you.
Thanks.